Welcome to AGNT, the podcast for enterprise tech meets the agentic era. I'm Gemma Allen, joined by my co-host Raphael Dornano, broadcasting from the New York Stock Exchange. And every episode we unpack how intelligent systems are reshaping companies, markets, and the way real work gets done. From Fortune 500 boardrooms to breakout upstarts, we're digging into the strategies, technologies, and people defining the next chapter of AI. Let's get into it. Raphael, welcome back. It has been a pretty crazy couple of weeks here since we last spoke. I think the last conversation we had was around SpaceX.
Right.
The market has responded. It's been an interesting roller coaster already. What are your thoughts? Do you have any regrets?
Should I?
No.
I don't think so. Look, again, I stand by my position that this company and what Elon has built is absolutely amazing. This is not one company, this is three companies with very different prospects. The Starlink business, which is, I think, for many, a great business with little debate around that. The space business, which is a moonshot, literally, and I would say high conviction on that because of Elon and because why would that not be possible after all? So second part, and then the XAI part with live news with the Cursor acquisition that was made effective in the last days, which was still like an option when they filed the IPO and which they have decided to unlock, which could change the game from an orchestration perspective, where I continue to think that regarding the valuation of an OpenAI, the valuation of an Anthropic, in the sum of the parts valuation, I do not give such a premium to this XAI business, despite the fact that they have the compute, that they have live data, etc. Again, not saying this is a bad company at all. I mean, it's worth close to $2 trillion now, but my value was around like just subpar 1 trillion, which is already a lot.
All right. So let's talk a little bit about what SpaceX means for the industry broadly, though, and specifically IPOs, right? Because the next two hot topics now are, of course, OpenAI and Anthropic, and both those companies have indicated they're also going to float this year, potentially by the end of 2026. Anthropic maybe sooner, we don't know. But, you know, it creates this kind of hype cycle. I think a lot of folks are wondering, now will this create this new bar of where we, start to think about valuations, or does it actually create some form of learning in terms of what, the market creates versus what the true signal actually is, right? So there's a lot to figure out, I think, when it comes to those two companies. Your Substack this week, you talked about the Red Queen's race, which is essentially saying, if I'm summarizing this correctly, that we're on a little bit of a treadmill. No one's really winning, right? Like we're all kind of racing,
right?
Against ourselves. Whether it's a race to the top or race to the bottom is TBD, but some of what's happened in the frontier lab space in the last couple of weeks alone has definitely, again, created some sort of confusion in that signal.
Look, I think Anthropic and OpenAI that are effectively wanting to go public, I think there is some smoke in the air, to say the least. At this moment, for many reasons and independently of SpaceX, I think we're in a situation where we're 100% convinced that the AI build-out is very real, that it is starting to have very strong benefits in the enterprise, and I'm more a bull on those aspects. I don't believe the reports, and I actually find them stupid, if I may, the reports that say, oh, look, this is not working, all of this is like smoke. I think that this is very real and that there's effective earnings transformation in the enterprise, which is the end game of all of this. So I'm a big believer in this whole AI build-out. However, when you go public, the path to growth and the path to profitability is something that matters for any rational financial investor. Now take SpaceX. Again, if you give more than half of the valuation to the AI business, not just XAI, the whole AI business including compute, you basically have very little KPIs to anchor your decision. You're like, oh, I need to trust the S1, I need to trust the bankers that this company could be worth, or is worth today this $1 trillion. So it's really like a bet, and you need to believe that Elon, because he's great, which he is going to succeed. So then you look back at OpenAI and Anthropic, those are very different species from SpaceX. Again, we tend to put all of the AI businesses in the same. We tend to say, oh, AI lab, it's the same. Anthropic has a very different business than OpenAI. XAI, it's a bit different also. I think that there's more and more concerns, maybe as they approach the public markets, that the unit economics are going to matter. People are very stressed by the endurance of growth. This notion, of growth endurance. What is your ability to sustain the level of growth from quarter to quarter? Not just how fast are you growing in absolute value or in percentage points, but are you able to continue growing at the same pace quarter on quarter? For that to happen, you need to have the same trend in token spend, where many enterprises publicly have said, wait a minute, this is getting out of control, we need to see something, there needs to be a change, because we cannot have infinite budgets yet, okay? So that's a huge pressure for the AI labs, both of them, they're both in the same position. And at the same time, you have these Chinese labs, which are now, with the release of GLM 5.2, this is the first time that you have an open source Chinese model that is not near the frontier, that is in the frontier cluster. And that matters a lot. I've been writing on Kimi, I've been writing on DeepSeek. I mean, of course, DeepSeek, everyone knows DeepSeek. The many different Chinese open source models. This model that was released the day that Fable was buried, and 3 days later it was available under an MIT license, is really, really good. It's really, really good on many capabilities, on coding, on in general a humanity last exam, on we're not going to go through the benchmarks, but on many benchmarks, it's really good.
But the one that's getting the most attention is cost per token, right? The fact that this offers a cost-effective option. I think the challenge is, and playing devil's advocate here with these Chinese models, is obviously a huge geopolitical, cultural inertia, which is perhaps very valid, around whether or not enterprises are really going to adopt them. Do you see CISOs, CTOs, CIOs truly investing, in a GLM 5.2 or even a Fugu? I know we're going to talk about Fugu in a second. How realistic do you think that buying decision is?
Well, I think it's very realistic, and I'm going to explain why. Number one, what you can see with GLM 5.2 is that we have a very strong inflection point in this move to the edge. What does that mean? Having a model that is available not on the cloud, but on your local device. So it would be wrong to say that now this kind of capability is available on your PC. However, it's getting better and better, and we've seen, we're clearly seeing an inflection point, number one. So if you are able to have that model on your computer, it changes a lot of things, right? You're not buying this from, of course, a Chinese cloud, but even so, it makes everything simpler. Okay, you still have the fact that when the model is trained, it's still trained in China, so that doesn't change. So that is still a hurdle. I mean, not the fact that it's when it's deployed, but when the model is actually built and conceived, it's trained in China, so there are geopolitical consequences here. Anyways, it's available on an edge device, that's number one. And number two, we've spoken about this many times, and I want to repeat this point, which is for me structural. It's when you are considering AI deployments, agentic AI in the enterprise, you are effectively having a chain of command with a captain, agent, and crew members of an agentic chain. Okay, imagine you have the captain and the fleet members that are rowing the boat. Okay, the captain can be Anthropic, can be OpenAI, can be Gemini, and one of the crew members could be DeepSeek, could be GLM 5.2, could be Mistral, I don't know. And if that model is 5 times, 10 times, 100 times cheaper, because it's not 100 times cheaper. When you put all things together, it's closer to between 5 and 10x, which is already very significant. Then you kind of have the best of both worlds. And we're already seeing multi-AI in many enterprises, and that's, I think, not a new trend at all. So I personally have been saying that this is going to be a strong reality in the enterprise, and it could come from the new NVIDIA open source models that we had discussed. It can come from Google. It can come from France. It can come from many. So not necessarily the Chinese models, but thinking that this is not going to happen because of geopolitics, I think is very naive. And
no, I accept that. I guess, we just kind of roll with the market narrative that we're in any given moment, right? And there is certainly, I think, across the Fortune 500, this level of concern around what it means to commit to a Chinese player versus US player. But when it comes to technical capability, those are different conversations. I want to go back to this red queen race, though, for a second, because what you're essentially saying is that, it's really difficult to bet on a horse in a race when we see a horse leading, but we don't know where the end is, right? We don't know when that horse is going to run out of fuel, which is a pretty accurate, I think, depiction of what's happening right now. At the same time, though, in any market cycle and in any technical race, someone always leads for a while. There is always a level of imitation that happens, a recursive element to the entire race, right? And that's going to happen naturally. And markets like this one are going to bet on a player. And when it comes to Anthropic and OpenAI, I mean, it seems as though, similar to SpaceX, we're going to end up in a situation whereby they are very much seen as the gods of today and tomorrow, right? And the titans of industry,
right.
TBD, but it looks like increasingly like that these guys are absolutely setting out a stall that's going to become pretty hard to beat. I mean, does that mean from your perspective that folks again are naive to invest or to buy in or in this now kind of market hype around Anthropic or OpenAI? Like, what does it mean when you're talking to your own customers or clients? Like, how do you position that?
Well, look, I've always been a very strong bull for Anthropic. I think what this company has done through the coding wedge and through the more like general penetration of the enterprise and their strategy, I think it's very strong. So I'm very bullish on that company. OpenAI, their product is great. Codex is a strong success, even better than Anthropic to some extent. I've always been concerned by the non-focus, in my view, of OpenAI going this and there, and have never believed in their consumer mode, which they are talking way less about, by the way. Like, it's all about the enterprise, but of course, but that was not the case before. So that was the preliminary note, I would say. I think that there is more smoke in the air at this time than there was before. That's just a point. I think that nothing fundamental has changed. What has changed is the convergence at the same time of very intense competition that is now working really well. So it's not like, oh, but this is a subpar capability. It's like it's very effective on the one hand. On the second hand, the cost concern, because when you were doing pilots and when this was still very small, no one cared about the cost of AI. It was still like tiny teams working. I mean, I'm being very caricatural, but it was not a concern. Now that it's becoming deployed in many enterprise functions across the board, of course, cost matters. So you have the question, and now you have Fable that has been bared. I personally think that this is hurting Anthropic a lot, and I can say this very openly. I had a conversation recently. I think that the combination of there is this model that it was great. Like, I spent 3 days working on Fable like nonstop. I basically pushed everything else I was doing, and I'm so happy because then on Friday evening I had no more access. So that was a good spend of my 3 days. Anyways, that was a super good model. I mean, it still is a very good model. You have that is not available, so you cannot play with your toy anymore. So you need to find a new toy, and those toys are way cheaper, and they're actually not maybe as good, but almost as good. So you create a very dangerous situation for the company who had the best toy, where you're like showing the children that they can play in other ways. So
it's interesting with Fable, though, right? Because there has been so much discussion. I listened to a lot of AI podcasts. I've heard a lot of folks talk about that this week. And I guess the kind of, the governmental view is that it's too dangerous. We need to kind of understand it more. There was that, CIA director who came out and said that it hacked into multiple classified systems in 15 minutes. Then they tried to retract some of that. So there's been like a little bit of confusion around the why this was pulled, right? But we know that it offers a level of threat or a level of unknown that perhaps others haven't.
For sure.
And the idea is that, you need to like control this because someone else will again imitate it, right? Another dark player, bad actor can get their hands on this and create a version of it that could be highly detrimental. But I wonder, is there a naivety in that assumption? Because they are developing anyway, right? Like we assume from the geopolitical conversation we're in that everything that's created that's good is a version of the great from the US. But I mean, we also know that there is a lot of development happening in China at the speed of sound, just like it's developing here. So do you think it's fair to assume that we're like protecting ourselves from bad actors by keeping these models offline? Or do you think that's somewhat naive as a basis?
Look, I think if the US government did that, there is a clear reason. So I don't necessarily want to comment on that because very simply, I do not have the answer. What I know is Anthropic needs to figure this out because I really think that, and I don't have insider information on Anthropic, I just think very pragmatically that the convergence of these factors makes it, I would say, a huge problem at this moment. So I hope that this can be resolved. One, because I want it back, but also because I think it's important for the company, number one. But I'm sure the US government has very concrete reasons, and there is something that they're working on currently, so let's put that aside. I just think that it's giving optionality at a time where that optionality is getting really good. What protects the US is that, again, AI, it's not just the AI labs, it's the whole AI stack that has been built around memory. I mean, a lot of those companies, of course, are in South Korea. We have Micron, the earnings are today, so I can tell you everyone is very stressed. Everyone today is very stressed because everyone is waiting for Micron earnings that are set to hit after the bell today, so in a couple of hours. So let's fingers crossed, okay? You have like many companies in all of the optical chain, like networking, so a whole stack that is being formed here, chips also, et cetera, et cetera. So the US has a lot of advantages. I don't think this is giving like, how can I say this? I think that at some point we need to stop making an opposition. Of course, geopolitics are key in this, but the reality of an agentic enterprise is not a geopolitical reality. So very obviously, the systems in charge, the key models are obviously going to be from a Gemini, I mean from a Google, from Anthropic, from OpenAI, and they have a huge leeway on that. So I do not think that, like, I don't know, United Airlines, I'm just saying this randomly, would give DeepSeek their whole system. I think the probability of that happening, just to be clear, is 0. So that is not my point. But I think having United Airlines or Delta, I'm just taking this very randomly, work maybe with Anthropic as the captain, and in that chain have a bit of DeepSeek, a bit of
And maybe that requires, when we think about, the market dynamics and what makes a company, a hyperscaler of 2030, right? A similar version to the hyperscalers we've come to know.
Right.
A completely different paradigm, because maybe there is going to be like a complete segmentation of markets, like, products and technologies that work for specific segments where you could take the risk with like an open weight model, for example, and like a mid cap or whatever it might look like, right? Perhaps their like entire thinking has always been based on these like huge technology titans that own it all.
Well,
and
yes.
This future scenario might be far more fragmented than that. Like, do you think that's possible?
Well, completely. Look, this is what is happening exactly in enterprise software. Like, in enterprise software, like, you don't have infrastructure on the one hand, applications on the other hand, which is why this is how we saw, like, companies up until now. Like, you have companies that are building agentic fleets on the right agentic rails because it's a very sophisticated architectural construction, because you have to have the identity of the agents, they need to be governed, they need to fetch the right context. So just in enterprise software, which continues to be hit, by the way, like the SaaS apocalypse is not over at all, that is already the case. So agentic AI makes us reshape how we think about categories, how we think about business models, and we absolutely need to stop putting our old lenses. I watched something yesterday. I will not do any quote, but I found this like ridiculous. It actually made me mad. You have this big private equity firm who decided in the part of its diligence to basically vibe code applications like across the board. And if they were able to vibe code an application, that means that the company is at risk of AI substitution, and so they're not going to invest in the AI company. Oh my God, like how can you do something like that? That just means that you think that the value of a company is the only product it's building. Take ServiceNow, take Salesforce, take Workday. Are those companies limited to the actual application of a CRM? Oh my God, of course not. So we need to stop thinking without nuance. That is
Exactly.
my only wish.
And when we kind of summarize that point that you've made this point a number of times. I've read a lot of your pieces. You talk about orchestration, right? About this orchestrator. You also mentioned this week Fugu as like a very interesting, I think you're quite keen on them as an example. But again, if you're a market analyst and you're looking at this, are you not just thinking, is this just not another routing layer? You know, how does it truly differ? And I think that's where these conversations tend to have like, you know, they're golden in one zone and black in another, right? It's the same with the SaaS conversation. You can be really popular for being niche at one thing in one space and be absolutely annihilated for being too niche in another. Like there's no consistency in how we view tech right now. But talk about Fugu from that lens.
Well, so Fugu is really interesting, and it made my Monday morning. Like, first, I really like the founder of this company, Sakana AI. Very, very smart. Had met him at TED AI and thought he was like absolutely the best. They've been very focused on like doing deep research and have been very vocal on to win in the AI race. You need to really have the right product. This can take time. We are not master of the timelines, but they've been very focused on like doing deep research. And they come out with this model on Monday where it's basically an orchestration model like in the model weight. So it's like it's not orchestration in the sense that you have a cloud agent like coordinating other cloud agents. It's the actual LLM is an orchestrator. And within that agentic chain, it can call Fugu, but it can also call Claude, not Fable, but Claude Opus 4.8, Gemini, etc., etc. So it's both a frontier model and an orchestrator through like how the thing is actually built, okay? And they have a very clear explanation. They issued like a technical report that is very easy and clear to read. So I invite you to read that. It's on GitHub. And what this proves once again is that the value of the harness and making this architectural construction work is moving at a very fast pace in directions that we did not expect. Personally, I was not expecting something like that, but I find it really interesting. Again, Anthropic had launched, the advisor strategy. I think it was in April where they themselves rooted towards Sonnet, Haiku to already avoid big token costs. So just to be clear, it's not new in the principle. Anthropic had done something similar 2 months ago. However, the fact that it's baked in the weights is a very strong innovation, but it's the same idea of orchestration. What does this show us? It's that the moat is always moving. Like, what is your moat as a company? What is your moat as a software company? What is your moat as an AI lab? Like, are you doing something that can be reproducible for many? Let's take context. Context used to be a very strong moat. I think I called it my second law of value in my Agentic manifesto. Companies are moving very fast on context. Just Databricks last week has done very strong announcements at their AI summit. Things move fast. So what companies need to do companies and investors is, what is really my unique source of differentiation? What is my superpower that I legitimately have, that others don't have? And how do I build a product around that and build a defensible position knowing that the technology will change tomorrow, the next week, the next month, for sure. So it's inviting us to revisit how companies are even built with intelligence at the core of every workflow. And is your moat the value of the intelligence, the technical value of LLMs. I think everyone knows that that is not the case. However, you need to be at the frontier, but that's not the mode. Is it the hardness? It still is for companies like Anthropic, OpenAI to some extent, but now it's being challenged. It's being challenged by Fugu, it's being challenged by open source Chinese models. So that means you need to continue moving one layer up into operational context. Now, who owns operational context, etc., etc.? I find it fascinating. It's a moving race, but asking yourself that question, where is the unique source of durable value? Knowing that the technology is going to change, that is the $10 trillion question.
Okay, so to close, I read something this week too, which I thought was interesting and kind of humorous. It said, in this crazy hype cycle we're in with SpaceX and Anthropic and these $1 trillion valuations, most people can't even, don't even know how many zeros are in $1 trillion, right? It's a great time to buy boring stocks, okay? What do you think about that, and how do you classify the world of boring stocks? Let's maybe close on that. Like, when you think about these companies with that USP, with that, somewhat, longevity to their moat, who are you looking at outside of the ones that we've talked about before, like some of the SaaS players?
Well, indeed, I would not put software in the boring companies right now. I would put them in the shaky companies,
Yeah,
so
sure.
not boring at all. Very exciting. I would, look, I think you have boring on the two sides. You have boring in the pure AI world, so the companies that are like the semi-cap producers, ASML, producing like machines that are needed for everyone. Companies that you would not even know. Toto, Toto,
Yeah.
like the company that is producing those great Japanese toilets. Well, they're producing very unique components for the whole AI cycle. That's a super cool company. Like companies that, a toilet maker, why would you invest in a toilet maker? Well, because it's actually fundamental in the AI stack. So you have boring in the sense that they're indispensable to the AI stack, and then you have boring in the sense that those are companies like, I take the example of Chubb, that is a stock I really like. Chubb, JP Morgan, Honeywell, FedEx, companies that are known to the public, that are solid, like that move against when the market goes down, Chubb goes up. All the time, AI companies shrink, Chubb goes up, vice versa. It's like systematic, it works all the time. Those companies are not, like they're adopting AI, okay, and they are transforming their earnings power, and it is already visible in the numbers. And for me, we are at the very beginning of that. And the companies that will not be able to transform their earning power, they're going to be in big trouble, because they're going to have their incumbent competitors that are going to be their challengers, of course, and they're going to have all of the AI native startups that are just waiting to replace them, and we're seeing a lot of that. So those companies are at the core of my investment thesis, and I call them AGNT. It's companies that when people say, oh, you're invested in I don't know, Chubb, JP Morgan, why? Well, because they're having way better margins. I can see that in the earnings of this year. And if the memory stocks all go down like yesterday, it gives me some insulation from this whole trend. So I'm very bullish. And in the same direction, a lot of those companies, you can know right now that their probability of survival is very low. So those are interesting candidates in the sense that, well, they're going to be in trouble, so maybe there are investment opportunities there.
Well, Raphael, I think that's a great next substack, the technical transferability of toilet technology. I think you need to write that next. So that's it for this week's conversation, and in 2 weeks we will both be in Paris.
Exactly.
Your home city, correct?
Yes, exactly. And in Montpellier technically, but I lived for many years in Paris.
Well, you're certainly Parisian to me, so look forward to that.
Of course.
Thank you so much for joining us and watching this week's episode of AGNT. Catch us in 2 weeks in Paris, France at the AI Race Summit.